Hello everyone, welcome back to your channel, The Novel Trading. I'm Urvana Kapur, your trading psychologist and performance coach. Today I'm going to discuss about a very popular psychological bias called the Gambler's Fallacy. See, trading has often been associated with gambling. So of course, psychological bias that are observed in gamblers are true in trading as well. And this is one of the most prevalent bias that I have found in my clients as well. In this video, first I'll explain you in detail what is gambler fallacy from a psychological perspective and also how it affects traders. I'll take various examples so that you're able to relate to it and understand when you are getting trapped in this bias in your trading decisions. Also, I'll be giving my psychological recommendations as how you can overcome this fallacy and make sure that it doesn't have any effect on your trading decisions. So let's start with defining what this bias is. In gambler's fallacy, or it is also called the Monte Carlo fallacy, an individual believes that a certain random event is less likely or more likely to happen based on the outcome of a previous event or a series of events. This was the literal definition of gambler's fallacy, but let me take an example so that it's easier for you to understand what this is. Let's say we are playing a game of flipping a coin. When we flip a coin, the probability of coming head is 50-50 every time. There is 50% probability of heads and 50% probability of tails. But suppose you flip a coin 5 times and each time it comes to be tail. What will you think happen on the 6th move? See, logically it is still 50-50 chance. But for a person falling in trap of gambler fallacy would bet on tails, as a thing that tails have been coming repeatedly, so that will only come. Vice versa can also happen, that a person will feel that now heads will only come as there has been so many tails in the game. Both of these thinkings are wrong and biased falsely, as the probability is still 50-50 as I said before. This probability is not affected by what happened in the previous coin flip. With this example, I hope you understand that in this we get bias towards one side. It can be either side. It is going to be a tail. You can think it is going to be head. It can be biased towards any other side. But the important thing for you to understand is either side is the wrong one. Your previous outcomes don't decide the probability. The probability will be 50-50. But the human mindset gives you the perspective that it gets biased towards one side. I hope you understood this basic real life example. Now let's apply the same concept to trading, because we are a trader, so we need to understand how it affects the traders. In trading, instead of heads and tails, we have wins and losses. Here also the probability is 50-50 in every trade. 50% probability of winning and 50% of probability of losing, right? Let's say you took 5 trades which have ended up with profit. Now you might have a feeling your 6th trade will also likely end up in profit, right? This is gambler fallacy in action. It is an innate subconscious belief that our past and future trades are connected with each other, which is technically wrong. Your future results are only dependent on your technical decisions and have nothing to do with your previous trades. No doubt there is going to be a psychological effect, but technically there is no link between your past and future results. But still, you end up getting biased towards one side. This is not your confidence on your trading decision, but a human tendency of falling into the trap of gambler fallacy. Let's take an opposite situation as well, so it's easier for you to understand. Let's say that you have lost 5 trades, and now you will think that I'll lose all trades today. Technically, your chances of losing and winning is still 50-50, but your inner voice is so demotivated with the previous results that it starts making you believe that you are going to lose only today. If you're a revengeful trader, then you can also get biased towards the other side. That is when your inner voice says, I have lost enough today, now I'll only win. Based on this voice, you'll start increasing your position sizing now, as you have convinced yourself that now I'll only win, so I can buy more and recover my money. This is also faulty. Sometimes you might get lucky, but it doesn't happen always, and you start losing your capital to extreme levels, just because of this simple bias that my previous trades have an effect on my future trades. In trading, it is very important to listen to your inner voice. Sometimes this inner voice is confused with intuitions, but you have to remember, sometimes it is the voice of your emotional bias as well, and not only your intuitions. You have to be cautious about it. I'm sure as a trader, you have felt these bias sometimes or the other in your trading journey. Sometimes you're able to skip this voice and still take rational decisions. Sometimes you get trapped by it and end up taking irrational decisions. Let's talk about the recommendations now on how to avoid this psychological bias. The best way to avoid gambler fallacy is to understand that no matter how many winning trades or losing trades we face, the outcome of next trade is independent of earlier trades. You have to look at every trade as a new one, analyze it independently, take trading decisions individually, and most importantly, accept results for that trade. Don't associate it with any other trade. Just because you lost 5 times doesn't mean the sixth trade has to be associated with it. Trust me, a lot of my clients have improved their results significantly by just practicing the simple trick of looking at every trade from a new lens. Be a critic to your inner voice and rechannel it in the right direction. If your brain is saying, I've lost 5 times, now I only win, then remind and say this out loud, that my probability of winning is still 50-50. Just because I lost 5 times doesn't mean I can get biased towards any side. If you have lost in consecutive trades, then now your focus should be on the technicals, looking for high probability trades, waiting for the right setups, following your rules, sticking to your risk management principles. Keep your focus on these important things that will actually make you profitable and not getting falsely biased. After every trade, take a break and analyze yourself and look how many trades are following into your system. As a trader, look at every trade from a new perspective, as if this is the first trade of your lifetime. Don't fall into this trap of gambler fallacy. Make a checklist for yourself. And before every trade, see if you have checked everything on that list. This will help you see every trade from a fresh perspective. I hope you've understood properly what is gambler fallacy. That is human tendency of being falsely biased towards one side based on the past outcomes. I've seen a lot of trader clients of mine getting affected by this bias and basing their trading decisions on this and later regretting it. I've made this video in particular to make you aware of this bias, as most of the times, just being aware of it solves most of the psychological mistakes in trading. So next time when you hear your inner voice making you biased towards one side based on your past outcomes, then remind yourself that this is a trap. I don't want to fall into it. I just have to take decisions on my setup rules and not my emotions and my biases. I hope this knowledge was beneficial for you and your trading journey. If you liked it, then don't forget to like this video. Also, subscribe to this channel, The Novel Trading, for more knowledgeable content on trading psychology and mindset. If you have any queries or face any issues while trading and would like to know my perspective and tips regarding the same, then do comment below. You can also book a one-to-one trading psychology session with me to enhance your trading mindset and profits. You can WhatsApp on this number to book a slot. Thanks for listening, traders. See you soon. Till then, happy trading.